Hello everyone, welcome back to Well Growth Club. Today, let's walk through the story of 197 Communications Limited, the company we all know as Paytm. This is one of India's biggest fintech brands, but its recent financial journey is something every investor should truly understand. Let's begin with sales. If we rewind a decade, Paytm sales were almost nothing, just 323 crores in 2015. Fast forward to today, and Paytm pulled in 7,316 crores over the past year. That's incredible growth, about 36% per year on average over 10 years. Even in the last 3 years, annual sales grew 10% on average. But Paytm's growth is not always smooth. Some years it doubled or nearly doubled sales, like a 77% jump in 2022 and 61% in 2023. However, the latest year saw a 30% drop in sales. So the story here isn't smooth. It's very up and down, sometimes surging, sometimes falling sharply. Now, let's talk about expenses. Paytm spends a lot to keep things moving. Expenses this year are 7,960 crores, which nearly matches their total sales. In most years, manufacturing cost, payments, payouts, commissions, etc. are 40 to 80% of expenses. Employee costs are 37 to 47% of all spending, a huge slice for a fintech company. Other costs fill up the rest, sometimes spiking to over 30% of total cost. So Paytm has a very expensive business model. The high costs are a big reason why operating profit is still negative. Yes, Paytm lost money operationally every single year. This year, the operating loss is 643 crores, and the operating margin is around -9%. The best years saw margins at just -9%, but it's never been in the positive zone. That means for every 100 rupees Paytm earns, they lost 9 rupees on core operations. What about those extra bits? Other income, interest, and depreciation. Other income sometimes helps Paytm out. 1640 crores this year, mostly from investments or financial income. Interest expenses are low, under 20 crores, which is nice. Depreciation is up to 660 crores, normal for a company investing in tech systems. Let's check out the real result, net profit. Paytm has never turned a profit on a full year basis in the entire history. Biggest yearly net loss was 4,231 crores in 2019. This latest year, the net loss shrunk, but it's still 299 crores. It's actually a big improvement, a 74% improvement over the previous year. Earnings per share almost always negative. The latest year 4.77 rupees positive, but only due to one-off gains, not from true business profits. And what about dividends? No dividends paid. Paytm is still trying to reach profitability and can't reward shareholders yet. If you see the return metrics, return on equity stays negative, -10% this year, and it has never crossed into positive territory. So overall, Paytm is a story of breakneck sales growth, high cost, and a never-ending struggle for profit. When times are good, sales explode, but the company has yet to turn that momentum into consistent, real profit. As of now, Paytm is not stable. The numbers jump up and down, and it is still searching for a path to steady profitability. The growth is unstable because it's all about how fast the fintech space is changing. Paytm spends a ton just to grow and keep its users. Competition, new rules, and tech expenses make it really tough to keep costs down. So, for investors, Paytm's journey isn't about steady, safe returns. It's a high risk, high potential story. If you join the ride, be sure you can handle the ups and downs, and keep an eye on when or if that positive profit finally arrives. If this breakdown helped, subscribe for more honest business stories. And let me know what company you want to hear about next.